The Morgan Report with David Morgan.
David Morgan, themorganreport.com with the weekly perspective for the week ending 20 August 2021. Well, I'm on the blog page, as you can see, and there was a roundtable discussion done on the 50 years of no gold standard. You might want to check in on that one. Let me start with the stock market. So the general market continues to make new highs, but there is internal pressure, or a discontinuity, I'll call it. And this is really the first week where we saw lots of selling in the large cap names, especially in the auto sector. There are a variety of reasons for this, but one could be, and I think it's a small one, but has an effect, and that would be the race into the electric car market, the EV market. Remember, this divergence that I'm speaking about is usually a good sign for a upcoming, let's say, correction in the overall market. So something to be aware of. October is usually the scariest month in the stock market, not always. We're obviously mid-August, got a couple more months to go. Many people that are attuned to the forecast business, especially around the general equity markets, are forecasting something to happen between now and the end of the year. Time will tell. Gold and silver continue to recover after their recent sharp spikes down, and not a dramatic recovery, but they seem to be rebuilding here, backing and filling, and continue to probably go sideways and working their way higher. August 17th, my friend Jeff Clark from goldsilver.com wrote this article, How Long to the Next Silver Spike? Obviously, you can read it from the goldsilver.com website. And he goes through the data, and you can read this. I brought it up because, one, it's a quick but a good read. Secondly, silver has a propensity to spike high and spike low. He brings that out in the article. And lastly, I have said many times that 90% of the move comes the last 10% of the time. If that is to occur, we're getting a little short on time. If we've got a 20, 25-year bull market, then the last 10% would be roughly 2 years. Could be less than that. He talks about these things usually go about 7 months. I'd agree with that. That's kind of the top of the spike, you might say. So time will tell. I could be wrong. What I do know is that the fundamentals have never looked stronger. There's more and more monetary demand based on what happened last year, which is a record for monetary demand. And that is pressing into this year. And again, we're in, almost 3/4 of the year has gone by, almost. So that continues. Also, the mint, of course, is getting, basically wiped out. There's limited mintage this year because of the changeover and what was happening earlier in the year with not getting the planchettes or blanks that are required to produce the amount of silver eagles that were in demand. But have they caught up yet? Doesn't look like they have, but they are selling wildly. The biggest news item this week by far was that Palantir bought $50 million in gold bars, and they referred to Black Swan. At least some of the articles revolving around this did. So it's interesting. It wasn't all crypto. 50.7 million in 100-ounce gold bars, Palantir said in an August 12th earnings statement for the second quarter. So noteworthy for sure. And I think this could be the start of others doing something similar in the gold market. Something you may not find very easily. This is the New York Sun, and it is with Dr. Edwin Vieira, one of my heroes. Short article, I think it's worth everybody's time. Beyond Bretton Woods, the constitutional questions on money need to be answered. Any close observer of contemporary discussions of monetary policy must become disheartened by the tendency to treat the subject as a matter of politics, economics, social effects, with little or no consideration of its necessary foundation in monetary law, and even more to the point, on the dependence of monetary law on the Constitution of the United States. So you can read this very short article. Again, I've interviewed Dr. Vieira a few times for our Mastermind series. Always worth listening and learning anything from my perspective with this gentleman. As I began this weekly perspective, we talked about in that interview that I would participate in the 50-year Anniversary of Nixon closing the gold window. This one's from the Financial Times, a 50-year quest for monetary stability. It's been proven over and over that a gold or bimetallic standard has more stability, but it does break down, and the reason it does isn't because of gold or silver per se. It's because of the intermediary, the fiduciary, the people that are holding the gold, issuing more paper receipts or digital receipts versus what's actually held there. And of course, gold is like a policeman on that, and this is what happened during this event, was that some of the nation states that we traded with, the United States traded with, woke up and said, wait a minute, I'll take the gold. I don't trust your paper anymore. And of course, the whole thing blew up. There's an article by Ronan Manley at bullionstar.com. I highly recommend as well. I'm not going to put it up. I'll just voice it. That talks about the UK, United Kingdom, coming in and really being the one that really pushed this closed. Always learning more. Ronan does excellent work, and I would say that I was always under the presumption that it was France that really pushed it hard enough for Nixon to actually be required to own the fact that the U.S. had overextended the printing of U.S. dollars. But he makes the case that it was really the U.K., so I suggest you look that up. Coming back to this article from the Financial Times, it's obviously the 50-year anniversary, and it's a pretty short article. We may be condemned to live with less stability than we would like. Bretton Woods depended on tight controls on cross-border capital flows, which neither can nor should return. The globally integrated world economy depends on the ease of fluid financial flows overall, better for having them. But the half-century quest for a replacement for Bretton Woods that fits our times can still go further. And of course, what has been talked about amongst the gold and silver alumni for such a very long time is what's really going on in these markets. And of course, the word manipulation comes up constantly. This is from Reuters on the 18th, which I think was Wednesday. Ex-JP Morgan metals trader must face racketeering charges. A federal judge in Chicago said 4 former JP Morgan Chase & Company employees must face charges including racketeering in a case accusing them of manipulating the prices of precious metals futures. The U.S. Judge Edmund Chang's ruling on Tuesday paves the way for a October 19th trial in the case, which is the U.S. Department of Justice's most aggressive attempt so far to police commodity spoofing, a tactic involving placing orders to move prices quickly and then canceling them. So it's a pretty simple article. That's the gist of it. Interesting. There's been so many charges, so many cases that have been opened and basically closed without seeing the merit from the court's point of view. This one obviously does, and also it's under the racketeering statutes, if I understand this correctly, which will cover more weight, let's say, than otherwise. I would probably be remiss if I didn't say something about Afghanistan. And this is not my expertise. Of course, you have to be in tune with world affairs. Gold is a world commodity, and it's known in every, basically, nation state in the world. But I am going to refer to the Corbett Report, and it is CorbettReport.com, as you can see. The featured video here, Afghan War Comes Home to Roost, the New World Next Week, which James Pilato and James Corbett do every week. I'm not sure I had their name right. Pilato's his last name. So this is a gentleman that, in my view, is probably the top of the top. I mean, this is something, if you're not familiar with the Corbett Report, you should become familiar with it immediately. And he doesn't always post on YouTube anymore. In fact, I think he's been banged a couple times. So you have to come to his website, which is the best way to really integrate that into your weekly news media feed that's alternative to the mainstream fake news. So I would highly recommend, again, that you come here and listen to what he has to say, Mr. Pilato, on Afghanistan and where this is really going. I'll leave it there. This is David Morgan of themorganreport.com. Truth seems to be seeping out in many arenas, not only in the manipulations of the futures markets, but what's happening on the illness, what's happening on the election or happened on the election, and many other arenas. And, again, the truth stands alone. It is what it is. Of course, there's always vectors in the human experience because there's so much emotion involved. But if we know the absolute, I'm not saying that what you hear on either side is always absolute, but usually with discernment, you can make a decision based on the facts, and that's what we want. We want to base our decisions upon the ultimate truth, or as much of the objective truth as possible. And that does fail at times in the human experience, but overall, it marches on majestically, regardless of your opinion of the truth. So I'll leave it there again. I'll be back with you next week with another weekly perspective.